So this is how I got a bond in South Africa at prime less 1.745. I had never bought before and I didn't actually qualify. So here's some tips. How you apply matters tremendously. When filling out these application forms, you need to be exceptionally meticulous, but there are certain things that stand out that can help you. For example, if you are in a career that has a lot of growth, that shows positively. So you really want to put an emphasis on titles and prospects of growth. This also comes with the fact that you should be earlier in your career, because obviously the earlier you apply, the more growth you have. If you're applying at 60 years old for a 20-year bond, the banks are going to laugh at you because who's going to pay a 20-year bond up into their 80s? However, if you're 20 and you're applying for a 20-year bond, then you should be able to pay it off by 40, and you have many years to spare, and you'll most likely be a repeat customer taking out another bond at 40 for 20 years or whatever it is. When it comes to filling in these application forms, it really is a matter of garbage in, garbage out, or gold in, gold out. I mean, this is how they decide whether you're even worth looking at. However, on the flip side of that, your current debt also matters tremendously, in the sense that if you have 3 cars that you have 6 years and prime plus 2% on them, and you have a really high monthly burden of paying off your debt, the banks aren't going to look favorably on that, especially on something like a motor vehicle or a credit card where you have very little to show for your money, because it's either a pure financial burden in the case of interest on a credit card, or it is a motor vehicle which is depreciating and losing value over time. However, something that's functional debt like a property, which is supposed to increase in value and you can rent out, that's good debt. So the banks will look favorably upon that. But for the most part, we're going to assume that this is your first home loan and you've never purchased a property before. And a credit score is the way that the banks determine whether you have good payment habits or not. And so it's very important that you do have a credit card, a cell phone account, a gym account, a previous rental agreements, some history of paying things, because the bank needs to know that you are good at paying, because you will be paying a large amount of money every month, the most of which will be interest for the first few years. Of course, your property that you're interested in matters too, and where you're buying. Land is valued at different places. The city center of Cape Town or Atlantic Seaboard is very different to buying a property outside of Oudtshoorn. Now, that property outside of Oudtshoorn may have farming benefits or oil or gold on it. Unlikely, but it might. And then that's going to be a very different story. But a square meter of grass is essentially useless outside of Oudtshoorn, but not useless at all, because let's face it, an apartment is basically a square meter in Sea Point these days. And you're going to pay 40,000 Rand per square meter for that apartment. But the banks know this too. And so when you're applying for a property, they're going to do their due diligence. If you are asking for 10 million Rand from the bank and that property is only worth 1 million, they're not going to give you that home loan. They're going to laugh at you, because this is a risk for the bank. They're taking out the money for you to purchase this property and you're supposed to pay it back. So the bank will actually send out somebody to do an evaluation to determine whether this is a good property in a good area, if it's been taken care of, if it's a part of a body corporate or some sort of treasury or whatever it is. They're going to look at the financials and make sure that it's well maintained. And they'll actually tell you what the property is worth versus what you're paying, and then use that plus the growth and trends of the area in order to determine whether this is a good investment for them. And you should listen to that, because that will determine if it's a good investment for you. And when it comes to banks, you need to know what bank offers what, and what banks are really good at. And so traditionally, Westbank, for example, is really good for financing cars, and ABSA is really good for financing home loans, and Standard Bank's really good for cash loans or whatever it is. Banks had these like traditional things that they specialized in and made them very competitive. That's less and less the case, and banks have tried to diversify their service offerings. So don't listen to a boomer who tells you go with this bank because they're the best. Don't have bank loyalty. Banks are all thieves and they're a necessary evil. But don't trust them. Pit them against one another, which we're going to get to. When it comes to choosing a bank, in South Africa we have something called a bond aggregator. This is a company that has maintained really good relationships with home loans departments at the banks. Usually they have a point of contact, somebody that can give them the inside scoop into the vetting process and kind of expedite things. This is a really good idea. It's entirely free for you to use. For example, some estate agents or agencies will actually have a bond aggregator in-house, or they'll have a bond aggregator that they work very closely with. You can use one of these, but it is worth shopping around. They're entirely free to use, and here's the trick. You can use 2 of them, or 3 of them, as many as you want. I wouldn't suggest less than 1. Definitely get 1, but I wouldn't suggest more than 2. Here's what I did. The bond aggregators will traditionally mostly only go to the big 4. FNB, Standard, Absa, and Nedbank. They tend to ignore Capitec and Investec because those banks just don't make it worth their while to bring in the business. And that's how the bond aggregator makes their money. The banks pay them for bringing in the business. What you can do is, because usually a bond aggregator will have a really good relationship with one bank, so they'll push hard. So the 2 that I used, one had a really good relationship with Nedbank and the other a really good relationship with Standard Bank. And actually the first offer that I received was from Absa. But before that, I'd also gone to Capitec and Investec and my business banker and gotten my own offers separately. Then I received an Absa offer through one of the aggregators and immediately sent it through to the other aggregator and said, look at what this aggregator's got for me. Now I've just incentivized the second aggregator to go and work harder for my business. Now, you may say that there's an immoral aspect to this, but at the end of the day, these aggregators make good money and they don't do that much work. But they do make good money and they need to fight for your business. You are the one who is stuck with a 20-year bond, a 25-year bond, a 30-year bond, whatever it may be. So you need to fight for a good deal. Once I'd gotten an offer from the second aggregator, which was a Nedbank offer, I sent it immediately through. These offers were then attached to the Standard Bank offer. Standard Bank came through. Then Investec came through with a really good offer. And don't put aside the fact that Investec is for rich people. They're really pushing their home loans departments and they're offering really great deals on homes and on motor vehicles. Consider them. And slowly, as banks saw that I was a good customer and a good client, they couldn't wait to get my business. I just kept getting better and better offers. Obviously, there's a time at which you have to cut, and there is a time element here. The estate agent's going to be pushing you pretty hard to get the bond approval. The seller of the property is going to want to push hard to make sure that it goes through. So there is a time element here, and you shouldn't dawdle. You shouldn't drag your feet. You should put this out as quick as possible, but also get yourself the best deal. Negotiate. Everything's negotiate. Don't be loyal to banks. And then you definitely need to see what else the banks offer. So, for example, I had 2 motor vehicles, and I was probably halfway through paying them off, but Standard Bank offered me a better interest rate than Westbank if I moved my motor vehicles over to them and took the home loan. And so there's an example of how they might offer you some form of reward or incentive to take their bond, and it may not be a better bond offer, but it could reduce your overall debt burden. They could give you better rewards rates on your credit card. They could offer better investments or better exchange rates if you bring in foreign currency. There's so many things that the banks are willing to do. that you don't know about. So ask them, find out these things, push hard and negotiate. And all these things I say having never purchased a property before. In fact, I wasn't really in the market, but I stumbled onto this house. I knew about the pricing in the area because I had done my research, and this is an area that interests me. And so I applied, and I learned all of this along the way. And I wish somebody had told me these things, which is why I'm putting it out there. In fact, I had just resigned from my permanent job where my income would not have qualified me for the bond that I have. And I moved over to a contracting position. And for those of you who don't know, banks don't look so hotly on contractors or self-employed people or any sort of business where you don't have a strong history of income. And so I had no history of income. I had like a signed retainer and a previous employment that didn't actually give me enough money. However, I had a really good credit rating. I had very low debt. I had built up assets over my 20s, and the banks favored my profile, and they believe that with my skill set, I will earn enough money over time to be able to afford my bond and pay it off in time and be faithful to my commitments. So keep that in mind, that there are guards in place to keep you out, but they're not fixed and they're not set. However, don't apply for a bond that you can't afford. You are only hurting yourself. Apply for a bond that you can afford, assuming that the interest rates are going to go up. Push hard to get less than prime. But at the same time, don't expect to get less than prime when you're applying for a bond of 300,000 Rand. You're probably going to get prime plus 1, prime plus 2. And so everybody's case is unique. Everybody's case is individual. Every property is individual. Every property is unique. So your story and your application and how you go about this is going to be very different. But if you have a similar account, or you have other tips, or if you got any questions, please feel free to comment below. Share this if you think anybody will help. Leave a like, helps a lot, and I'll see you in the next one. Thanks.